Hey, it's me. I'm back. This is a hot topic and this is a good one. So if you are thinking about shopping your insurance, I hope that you watch this video and take it into consideration because shopping your insurance is a lot more than just searching for the cheapest quote. There needs to be some strategy and some thought process into it. And in this quick video, I want to explain to you why you don't want to shop your insurance too often, but why you want to strategically make sure that you do it at least every few years and how that whole process works behind the scenes. Now, if you've made it this far, you probably realize that insurance isn't just about getting the cheapest price. A lot of the businesses that I work with aren't just looking for the cheapest quote or the cheapest option. They understand the importance of how their business is being perceived by the insurance carrier and how it greatly impacts the overall price and the premiums that they're going to pay, not to mention how it gets other carriers very competitive to also try and win their account and how they can use that to work against, the other carriers to drive down their costs even further. Anyhow, one of the things I wanted to explain to you is that managing your insurance costs is a part of business. I get it. Everybody wants to save money. Who doesn't? But without a strategy, chances are you're actually just hurting your efforts from actually getting a lower price because you don't understand the right way to do it. And you're just going about it by trying to seek to get a cheaper quote. Let me explain what I mean. I call this my 3-year strategy. So the first thing I'll say is that I don't recommend that you shop your insurance out every year, but you definitely want to make sure you do it at least every 3 years. Now, you've probably heard me say before that insurance companies are for-profit entities. They like long-term customers, just like you probably like long-term customers. So one of the first things that you have to realize is that they value and they reward those long-term relationships. And when you understand this, and you can strategically position yourself to benefit from it, you can use this to your advantage. Now, the reason you don't want to shop your insurance out every year is because every single time an application comes into an insurance company for your business, they track all of this, whether it's from one agent constantly sending it in or it's from a variety of different agents sending it in. These underwriters go through a lot of work behind the scenes, from reviewing claim reports to researching your business to having supplemental applications done, maybe doing inspections, but they put a lot of time and energy into it. And a lot of these insurance carriers, they realize that if you're the type of account that shops your insurance out every single year, you have to stop and ask yourself, what motivation do they have to really jump through hoops to offer you a phenomenal price to win your business this year when they can see based off of the track record that there's a high probability you're going to shop it next year. And if somebody offers you a little bit cheaper price, then they run the risk of losing that account. There's nothing in it for them. There's no skin in the game. They're not going to take all of that risk to write your insurance for 1 year and then lose your account and pick up all that liability and the potential tail of a claim that comes forward years down the road from the 1 year that they wrote your insurance on a type of account that is simply just moving from one insurance carrier to another. Now, even if you don't move all the time, maybe you stay with the same carrier, but you still shop it out. What you have to understand is they want those long-term customers. And if you have the reputation that you shop it all the time, these insurance underwriters, I see it all the time. They will see a submission and they will say to me, I've seen this account every year for the last 5 years. I've spun my wheels. I've wasted my time. We didn't win the account. They stayed with the current carrier or they went somewhere else. I'm not going to waste my time anymore. I'm going to close my file and I'm going to move on to an account where I think I actually have the possibility of winning that account. You see, these insurance underwriters, they're not in the business. They don't make any money just releasing quotes and not getting the business. So you have to stop looking at it from just your point of view, which is that you want a cheaper price, and understand their point of view, what motivates them, and then how to position yourself to benefit from that. So I want to explain to you how to do that. Again, I said you don't want to shop it every year, but you definitely want to do it every 3 years. And the reason you don't want to do it every year is because of what I just explained to you. However, what we do want to do is we want to shop it at least every 3 years. And in the hopes is after 3 years, I'm an independent broker. So me personally, I'm licensed with over 70 different carriers, and I have the ability to market it out to a lot of different carriers, getting a lot of interesting underwriters to take a stab at it. But I can then put my clients in a position where we can get some other carriers to give us some competitive quotes. But now we hold the leverage. Now we can go back to our current carrier and we can say, we've been with you for 3 years. We've been profitable. What are you going to do to keep us for the 4th year? And an insurance underwriter realizes it is significantly cheaper for them to reduce their renewal pricing on an account like yours that they already have had on the books for multiple years that has been profitable and you pay your bills on time. It is cheaper for them to reduce the renewal premiums for an account like yours than it is to stick firm with their renewal pricing, lose your account to a competitor, and now they have to go out and find a new piece of business to replace the lost revenue they got from losing your account. So what they do is you can now leverage these other quotes that you got over here from another carrier and go back to your current carrier, and you can present to them what you have. And 9 times out of 10, they're going to renegotiate their renewal terms lower to keep you as a customer. And worst case scenario, if what they're able to lower their renewal terms still isn't as good as the option we have over here, we have options over here. We can move you to another carrier who is giving you significantly better terms and conditions. And best case scenario, if the current carrier says, we love this account so much, we don't want to lose it, and they drop their premium to a level which is very comparable to what a carrier over here was doing it, now it's a win-win situation. They get to keep you as a client and you get to reduce your overall cost. So when you understand this and you understand their motivation, you can strategically put yourself in a position to hold the keys or hold the leverage to be able to get them to realize that you are a good account that they want to keep on the books, and they're going to work extremely hard to keep you and not lose you as a client. The other thing you have to think about is that when you build that relationship with the carrier, you want to try and do it over 2 or 3 years. So if every single carrier is raising rates by 4 or 6% every year, and that's the standard across the entire industry, there's no reason to get alarmed in year 2 when they're looking for a 4% rate increase, when everybody else is looking for a 4% rate increase. You're not going to accomplish anything by moving somewhere else because they're all getting that same type of increase, because that's what the market itself is determining. But when you understand how to leverage the relationship that you've built over a few years and the good reputation you have with that carrier over those few years, and you understand how to then take other competitive quotes and use that to drive down your current carrier's renewal terms, you're now in the driver's seat and they have the opportunity to keep you. And again, as I said, if it doesn't work and they can't go any lower on their renewal pricing, and that's the price that they have to release, then we have some other options over here on the table that we can move you to. So when you understand that from a strategic standpoint, it really makes a lot of sense. But most importantly is you're not just arbitrarily going to other carriers saying, give me a quote, give me a quote, give me a quote, hoping for the best one. There's nothing in it for them. They're not going to jump through hoops to give you a phenomenal price to win your business. And this goes back to what I said in the beginning of this video. If a brand new customer walked into your establishment today and asked you for a phenomenal deal, are you going to give them a better deal than you're giving your long-term customers? Of course you're not. That doesn't make any sense. So why would an insurance company do it? So stop just going about this willy-nilly, I guess I'll call it, and just going out there to try and get quotes. You need to learn how to strategically position yourself. And that's what I help my clients do. Put you in the position to be able to leverage the strengths that you offer to drive down your cost and to continue to get insurance companies aggressively fighting to win your account and then keep your account once they have it on the books. So hope this helped. If you have any questions, feel free to reach out. All my contact information is below. Have a strategy. Don't just go about it blindly, and we'll see you on the next one.